Winnie, I'll start with you. You guys have been looking at this very closely this week. Yeah, give us your take.
Yeah, so it's been a really exciting market. You know, the Nikkei and the Topics both hitting like a 3-decade high. So investors are really excited about like what are the structural changes that were happening. So obviously with inflation and corporate governance, things that are just actually fundamentally changing the Japanese market. But as well, we're looking at some of the external factors, maybe the US and Europe heading into recession, or China not being, you know, as strong of an economy, and also facing some geopolitical tensions. But Japanese equities have been really cheap the whole time. So we're seeing very strong foreign fund inflow for the couple past, few weeks. But today, it's slowing down a little bit. People citing, just an overheat. But long term, it seems like the rally is still going to sustain.
Mark, the thing is, it all seemed set fair to have some decent gains, and, a record winning streak was in prospect. And, Mark, the question is, what went wrong?
It's probably just got a bit overcrowded, as Mark Hubmore was saying. Because there have been so few clear themes around Asia in particular in terms of equities, so many people have piled into Japan. You saw inflows from foreigners for 8 consecutive weeks were coming in on the positive side. That's a pretty incredible flow to be going in the same direction continuously. Everyone's talking about it, not just Warren Buffett, but so many other foreign people have been involved. They've been positive on Japan. It's become a bit of a global macro story. And at any point in those kind of stories, you get the boat tipped too much to one side and it's bound to list the other way. The main factors that are driving Japan actually are sustainable. And once there's been a bit of a calming down in the market, we may well see Japanese equities start to do well again. But it will need a bit of a period for people to churn through this situation. But if you look at the key changes here, it's a mindset change that we haven't seen in Japan really in decades. You've got the Japanese government welcoming foreign companies in the tech space to come on shore. And you've also got the Tokyo Exchange trying to rally people to pay better dividends, to do share buybacks, to do things to make equities look more attractive. We haven't heard that kind of thing from Japan in a very, very long time. So those are positives which will stay in place. But in the near term, sure enough, we've got some positioning that needs to be unwound. Too many people in at the same time.
Yeah. And Winnie, I'll bring it back to you. As you mentioned, there's signs of overheating in the short term, but what are people that you're talking to saying about whether this rally is sustainable or not?
Yeah, so most of the people we've been talking to have been saying that it is very likely to sustain because some of the changes, like Mark mentioned, are structural, so they're not going to be temporary. But some of the things that we have to watch, I think, going forward is, okay, if this inflation is actually going to sustain, which means is the price hikes and wage hikes actually going to continue going forward. But at the same time, when we look at shareholder returns, we see buybacks, we see dividend hikes. Those are great. But a lot of domestic investors are not actually buying Japanese equities as aggressively as foreign investors, citing that, it might be hard to imagine Japanese corporates to change in such a short period of time fundamentally. So in order to see a boost in profitability, they would actually need more time to be more convinced. So despite, I think, that the overall sentiment being quite positive towards Japanese equities, these are some of the factors that will be looking out going forward.
Speaking of going forward, Winnie, talk to us about risks, short, medium, or even longer term. What do you see? Right. So short-term risks. So I guess it's also related to how stocks are down in Japan today. U.S. Debt ceiling discussion is still something that people in Japan are actually watching as well. In terms of the more longer term, Japanese equities or market is very much influenced by the global market environment. So if the U.S. and Europe head into recession, that is still a risk, and people are also wary about maybe potentially the strength in the yen later this year might actually have an impact on Japanese equities as well. Although right now it seems to be a smaller risk than what people imagined earlier in the year.